Hi everyone, welcome to today's video. So let me start with a very quick story that a few days back I had made a video on a company called as Starsons, and here is the video link. And the very next day the company gave a breakout of roughly 15% increase in stock price. I started getting a lot of questions that Akshat, do you have insiders information? The answer is no, I do not have insider information, but I have market information. Now what is meant by market information? It is simple, plain macroeconomics that I keep talking about. The macroeconomics works like this, that there is a crash, and after the crash, first and foremost, large cap, blue chip and safe stocks, they start showing recovery. So that recovery phase in the Indian market to a very large extent has been over according to me. Then comes recovery in mid cap and small cap stocks. So these are slightly more volatile in nature, then they will get recovered next. Then finally, more volatile stocks start recovering. Now what do I mean by volatile stocks, volatile assets? These could be assets like cryptocurrencies. These could be assets like overvalued tech stocks. These could be assets where the PE ratio right now might be very, very high. And then when everything is recovered, we truly start seeing the bull run. The bull run continues for some months, few years, depending on the macro circumstances, and then we again witness a crash. And that is how the cycle keeps on circulating. So using this piece of information, I had been investing in large caps. Then I rotated a lot of money in small caps that have started to give a run up. And then finally, I've started to invest in some volatile assets as of now as well. I'll make subsequent videos on that. Now, in today's video, I'm going to do a quick discussion on three stocks that I feel are likely to give a breakout in and around Diwali. They might give a breakout sooner, but that is the time duration that I have for these three stocks. These mostly would center around mid and small caps or will fall in this volatile category stocks. And these are good company stocks with very good recent quarter results. So by the time Diwali hits, I'm quite hopeful that all three of these stocks will start giving an uptrend. Now, important disclaimer that this is not an advice from my side to push you to buy stocks. That is completely on you, whether you want to analyze it, add it as an information. Please take responsibility of whatever investment you are making. This is just from a discussion oriented perspective. Please pick this information up and then do your own due diligence, and whatever you feel right, please take positions accordingly. So let us quickly discuss three stocks. The first and foremost stock that I have recently purchased, it is called as Prestige TTK or TTK Prestige. And what type of a company it is? It produces somewhat consumer durables, kitchenwares, so mixer grinders, pressure cookers, etc. And many of you might be having this product in your home as well. Let me very quickly help you understand the recent results and overall company fundamentals first. So you will clearly see that this company has a fairly high ROCE. ROCE simply means return on capital employed. So if you give this company 1 rupee, it is able to turn that capital into 1.25 rupees. So the capital efficiency of this firm is fairly good. Second key point, that this is almost a zero debt firm, having 5% debt for a mid-cap companies. So you can see this from the size of the company, that the size of the company is not humongous. So this is a mid-cap type of a company, and having 5% debt is not that big a deal when it comes to small and mid-cap companies. Now let us very quickly take a look at the financials. So you can see that the sales have been going up. There has been no problem. It is sitting on its highest ever sales. What about profits? Again, we are sitting on highest ever profits. So no problem there. If you check the latest quarterly results, you might get a little bit worried because you will see 629 crore rupee. So you are comparing the June quarter. So compare it with last June. And here you will see significant jump. If you go to 2020, it was the COVID time. So really bad situation then. But even if you compare it to June 2019, the firm has been on a growth trajectory. So this is really good news from that perspective. So okay, so all this is historic data. This would have been already factored into the stock price as of now. But why do I think that this company is going to grow from this point? Okay, so here is the quick analysis about that. So first and foremost, this company is spending a lot in terms of expanding its fixed capacity. So you can check this from this fixed asset column, and you will categorically see that over the last 3 to 4 years, its capacity expansion has been the highest. It simply means that they are putting in more factories, more plants, etc., etc. Now, whenever a mid-cap, small-cap company is undertaking fixed capacity expansion, not taking a lot of debt to do it, has revenues and profits that can service this capacity expansion, it is always a great sign. The stock might not give a breakout in maybe like another 6 months, but it sooner rather than later will definitely go up. This you also need to see it in the context by doing a little bit of forecasting. For example, majority of the people buy pressure cookers, buy kitchenwares when? They mostly do it in Diwali time or during marriage times. So the marriage season is starting, the Diwali season is there. So it is very likely that this company is going to have an exceedingly good October, November, December, January period, and it is going to make a lot of money. So let's let me very quickly show you the product breakup also so that you can visualize the company better. So this is the range of products that the company currently sells. So it has fairly diversified sales. For example, cookware is 22%, pressure cooker is 29-30%. Similarly, you have kitchen appliances that makes 22%. So this is a fairly well diversified business. Now this is good from the sense that in case people suddenly move away from buying pressure cookers and they rather start using induction cookers or microwaves, hypothetically speaking, then also this company has enough leverage in terms of expanding its other product lines. So overall, very solid business. Now, a final point about TTK Prestige, that how much profit potential do I see in the stock price? So let me very quickly run you through the charts. This is what I see, that right now there is an accumulation pattern that is getting formed. Most likely it is going to go like this, then it might form like a cup with handle pattern, and it is going to give a breakout and it will reach this point, which comes out to be around 1250. Now, is it going to happen immediately? I don't know, but most likely it should, especially if the market stay intact. If the market overall do not fall, then something like TTK Prestige should hit this level. That is what my hope is. So this brings us to second stock, and again, this stock is likely to give a good recovery, and especially if you're considering diversifying out of India, then this is possibly one of the best stocks right now, and it is Amazon. Now, before I delve deeper into this stock, let me very quickly talk about the correlation between Indian market and the US market. A lot of noise has been made that, you know what, that India is completely delinked to the US and it does not depend on US economy anymore. We are completely independent, etc., etc. No, the entire world depends on the US and the US depends on entire world. Why is that the case? Because US is the reserve currency of the world. So there is no point in going into the arguments that Indian market is going to do well in an isolated form and the US market will not do well, or vice versa, right? So there is no point in going that. Let me give you some data so that this debate is hopefully settled. So here is a 10-year study of the US market and Indian Sensex, and what you would notice is that some years the Indian market fell a lot more and the US market did not fall more, but next year Indian markets rose quite aggressively but the US market stayed sideways. But if you combine these 2 years, you almost get similar data. And if you keep on doing this 2 to 3 year exercise, what you will notice is that there is a very, very strong correlation between the Indian market and the US market. Is there a perfect correlation? No, absolutely not. There is not a perfect correlation, but the correlation comes out to be 0.65, which is a fairly high correlation number. So as a sensible investor, you must build some positions in the US stocks also, because it gives you a kind of a hedge against the Indian market. So therefore 20% of my portfolio is dedicated to the US stock. Now many of you have asked me that, hey, which platform do I use for buying US stocks? So I am using Vested. It is an excellent platform for buying US stocks. I will be putting out some pros and cons regarding Vested on the comment and description box. So you can go check it out, and if it fits your profile, you can consider using the platform. So here are some salient points that you should know about Amazon. So first and foremost, it went under a stock split on June 6th of this year. Now, what is the utility of a stock split? So very quick academic explanation there. So let's say that you have a 2000 rupee note. Now you have 4 or 500 rupees note. Now, is there any difference between the two? The answer in value terms is absolutely not. But when you have 400 rupees note, probably you might have an easier time going to the market and doing shopping. Why? Because the liquidity increases. So as a result of stock split, the liquidity of Amazon stock has gone up, which is a positive sign. It's not as if that there is something fundamental that has changed in Amazon because of stock split. Nothing like it. I'm just talking about this stock split thing because it has been a recent thing that Amazon had done. So going forward, the hope is that a lot of retail investors will come into Amazon, which is definitely a good sign in case you are investing in Amazon. So point number 2 is that in 2021, Amazon was one of the worst tech performing stocks. In fact, its performance was so horrible that even now it is trading roughly 25% from its peak. So you can clearly see that this is where the recent peak was made, and if you bring it down, it is still roughly 33%. So I was wrong about that. That number is actually not 25%, it is 33% from its peak. So this is a fairly big fall that Amazon is still exhibiting, and that is the reason why I feel that it is available at a significant discount. Now, just to talk a little bit about technicals here, this is in the zone of bulk buying according to me. Now, what is the zone of bulk buying? Please check my HUL video. That is the same logic that I had used, and HUL had given a massive run up. Again, I'm not trying to create a FOMO. Please buy it, please don't buy it, please don't make that decision just through this video. Please go and do your due diligence after this. I'm just presenting another data point for you. So what is meant by zone of bulk buying? It indicates a very strong zone out of which the stock has moved, and as a result, it is very likely that it will come back into that zone. So let me very quickly talk about that. So for example, you can see this as the resistance line, and this is the support line. It has a very, very strong resistance on these points, and it has a decent support on these points. So this could be considered as a very important zone for the stock. It is again very, very likely that the stock will definitely move into this zone, and if it moves into this zone, we are easily looking at 10 to 12% gain on this stock, and therefore I am taking slightly more positions onto this stock. I had already purchased this in the past, but I am building more of my positions on it. Now I'm hearing a lot of keyboard clattering noises, and people would say that, you know what, American market still overvalued, inflationary concern, interest rate concerns, etc., etc. No, we are well past those discussions as of now. Yes, there can obviously be a correction of 5-10%. Those type of corrections can always happen. But generally, there is no new negative sentiment in the market as of now. Please do not believe in highly academic stuff from that perspective. Let me show you some fundamental data about Amazon, and you will be able to better appreciate as to what exactly is happening at Amazon and why it is likely to grow from this point. So let us very quickly check the fundamental data for Amazon, and let us try to see if the company has potential to grow from this point. So here, if you check, you will categorically see that back in December 17, it used to make a revenue of 177 billion. It has almost 2.5x in around 4 years. This is like massive growth for a big company like Amazon. Has it come with profitability as well? The answer seems like a yes, but let me quickly check. So you can again clearly see that the net income is 33.36 billion, and here it was 3.03 billion. We are reading from right to left because we are analyzing the data in the US, and that is how annual and earning reports are presented. You can go and check this on Alpha Screener. This is by Vested. So in case you have an account there, they will give access to you and you will be able to access this. So now comes the natural question that, okay, revenues are growing, profits are also growing. Then why is it that a stock like Amazon fell by like almost 40-50% from its peak in the US? Because of the fact that it was having a massive PE before the stock market crash began. That's one. Second key problem that Amazon had, that the US printed a lot of money and that flew predominantly to US stocks. And now a lot of good US stocks have started reaching sensible valuation. Will it go down massively from this point? I don't think so. Now, third and final concern for a stock like Amazon was that its gross margin started to decline over the last 3 years. Now, this is an important point that you need to understand why this was happening. So due to COVID, what was happening was that small retailers, they were cutting down a lot of their prices because they had a lot of unsold inventory. Amazon had to go and compete with them, so to say. So their retail business took a lot of hit. Now it is being estimated that Amazon is jacking up the prices again. Again, the festivity season, be it Diwali in India or Christmas in the West, Amazon is going to jack up its prices. Amazon is likely to do fairly well during this time. Also, the inventory pile up problem that has gone away. So as a result, even the small and medium retail business people are also going to make money, and even something like Flipkart and Amazon are also going to make this money. So in essence, the margin problems that Amazon had been facing, it is likely to go down. So finally, let me talk about the last point about Amazon, that where is it going to get its next layer of growth from? The first and foremost sign comes from the Amazon Web Service domain. Now you can check this from this snippet that it is one of the most profitable segments from Amazon. A lot of businesses have started to avail the AWS service. Now, if you are from the tech industry, you will definitely understand that the web service industry is actually growing quite a lot year on year, and Amazon is one of the biggest players in that space. Now, other companies have also started their AWS equivalent and they are trying to catch up, but Amazon is well ahead in the race. So at least for the next 2 to 3 years, it is highly unlikely that its profitability from AWS is going to come down. Point number 2. When it comes to ad revenues for Amazon, this is becoming a great income stream for Amazon. You can check it that at least from a profitability point of view, it is catching up with Google's monopoly. So I'm not saying that they are making equal amount of money. Just the profitability rate is similar to Google. Third and finally, they have been successful in identifying the next markets where their growth will come from. Right now, that market is Latin America and Africa. In fact, Africa is the youngest continent in the world, very similar to how Amazon expanded quite aggressively in India. They are playing the same game in Africa and Latin America. So it is a very clear growth plan that over the next 4 or 5 years, they are going to go big in these continents as well. So in case you are taking a short-term bet or long-term bet, both the bets seem right on Amazon as of now. Now let us talk about third and the most controversial stock on this video, which is DMart. Valuing DMart is really tough. Anyone who says that, you know what, DMart's value should be 2,000 rupees or 4,000 rupees or 8,000 rupees. Everyone is guessing. No one will be able to predict DMart's accurate price. And there is a massive reason for that, and I will explain that. So first point that you should know is that if you check this particular snippet, you will categorically see that Amazon's PE is very high. Now, what is the meaning of high PE? It simply means that the market is betting on DMart to grow really fast. It is okay for a company to have high PE or low PE, it doesn't matter, as long as the growth rate of that company is justified. If a company has very high PE, but the growth rate of the company is very high, high, it is completely okay, not a problem. But on the flip side, if the company's PE is very high, but the company is not growing at a very fast rate, then it becomes a problem, and that is when the stock price of a particular stock crashes. Which brings us to a second related question, that would DMart continue to grow really fast? And for this, you need to understand the current growth model of DMart. So basically what DMart had done, and probably I'll make a separate video on this, but I will explain very quickly what DMart has done to grow really fast. So first and foremost, they went and acquired a lot of real estate. They did not believe in the leasing model. They believed in the entire acquisition model of real estate. This is very similar to how McDonald's had built a monopoly. DMart is doing the same in the retail space. How many? Here is the total store openings by year for DMart, and you will clearly see that this number has been going up, and this has been a very strong growth momentum. All this is positive news, but here is the problem now. All these acquisitions had been done in the last decade when the real estate prices were extremely depressed. There was hardly any growth that came in the real estate sector per se for the last 1 decade. And a company like DMart that could procure a lot of cheap debt and buy a lot of real estate, it benefited like crazy. And literally by using this creative finance thing and using this market opportunity, they were able to carve out a very strong business. So what is the business model of DMart? It is fairly simple that, hey, sell everyday usable products at super cheap prices. That's it, done, right? So that's what their business model is. So you need to ask yourself a question that how do they keep the prices low? They keep the prices low because that their major cost, which is the store cost, that itself comes out to be low. And as a result, they are able to pass on a lot of benefits to their customers, keep the prices for their goods super low, and are able to beat the competition. Now, unfortunately, what is happening is that the real estate prices are growing. And now this will turn out to be a difficult time for a company like DMart because they will find it harder and harder to open newer and newer store at the same pace. I'm not saying that DMart will become fundamentally bad. No, it is a wonderful company. I don't even need to touch the financials of the company. It is doing fairly well. But the overall growth outlook going in the future, that looks a little bit murky because they will struggle in terms of acquiring newer real estate at super cheap prices, and therefore its overall store expansion, it might suffer. Then you would ask me that, okay, Akshat, then why are you talking about this stock if it is not going to grow in the future? The answer is I don't know if it is going to grow massively or not. There is a good chance that it might be able to overturn this situation. So how can DMart deal with this problem? So for this, let me show you a very quick financial snippet of DMart first. So if you study the financials, you will see that its operating profit margin has hardly grown. And there is a massive opportunity for DMart to grow its operating profit margin. Now, operating profit margin means what? Operating profit margin means that DMart is selling this pen. Then let's say that they are selling this for 100 rupees and their total cost of this pen comes out to be 90 rupees. Then its operating profit margin becomes what? 100 minus 90, 10 rupees. So this is the operating profit margin. So on DMart products, do they have the opportunity to increase this profit margin? The short answer is yes, because these retail stores do something called as product substitution. So product substitution simply means that, let's say hypothetically, DMart is selling a lot of Hindustan Unilever products, detergent, shampoo, this, that. Going forward in the future, they will say that, you know what, why sell HUL products? We will release our own products only. People anyways want to come to DMart store. If they see our products, they will at least try it out. So when this strategy starts working more and more for them, they are going to increase this profit margin more and more. So just for contextualization, let me help you understand HUL's profit margins. So here is the profit and loss statement for HUL, and what you will see is that their OPM or operating profit margin is close to 25-24%. I am not saying that DMart product will start getting 25% profit margin, but there is a very good chance that they will bring it up to 15%, and that is almost 2x the profits. So in order for DMart to grow from this point, they don't even need to expand their stores. All they simply need to do is work on their profit margins, and I'm sure that they are already on it, and therefore I am an investor in this company. Out of all these three stocks, which one is my favorite as of now? So from the short term, my favorite stock would be TTK Prestige, and from a longer term, I'll be bullish on both DMart and Amazon. I hope you enjoyed this discussion, and I will see you soon.